And that means we are now live here on our YouTube channel. It's Wednesday night, and we got our weekly event dialed up for you here tonight, Trade Masters, where two coaches go head to head, bringing trading picks from Delta, Theta, and a wild card round. See who can find the best trades out there and get voted on by our community. And I've got Coach Tyler joining me here for a Wednesday night, back actually trying to get his crown back. Coach Emily had a last-minute family obligation. Looking forward to beating my mentee down. I'll have to do that another night. Just all in good fun, Coach Emily. Don't chop my head on Tuesday nights. But I got Coach Tyler here to join me, and he is back from vacation. He was on our halftime report today. You know him. You love him. Tyler, how you doing today, sir?
What up, friends? What up? What up? Back for Trade Masters. I've never gone against him in Trade Masters, I don't think. So I'm in for a treat.
You are in for a treat. I think we're all in for a treat. I'm looking forward to a fun, action-packed evening where we all bring some good analysis and have a few laughs. By the way, if you're out there watching the show right now, welcome out #Team Tackle in the chat. And from what I understand, our fearless leader, the CEO of Tackle Trading, Coach Matt Justice, my daily partner in crime in terms of everything we do, halftime report, always joining me doing some analysis. He's over in our Discord channel, Tyler, with some of our pro members from Tackle Trading who have access to our Discord channel, and they're having a live conversation while we're doing Trade Masters. So if you're a pro at Tackle Trading, if you ever want to be a part of that Discord channel, make sure you email Team at Tackle Trading. We'll also send you an email with some information about Discord moving forward. But I can't wait to hear a little bit about what the pro members, Team Tackle, and Coach Matt have to say about Trade Masters tonight. Tyler, it's a little bit interesting. I would just say that. We'll see what comes of that. Anyway, Discord's kind of a cool thing. I know you're in there all the time with your lab with our community members, right?
Oh yeah, talking it up every day. It's trading's a lonely sport. You know, we get to talk to each other on YouTube, and we take it one step further on Discord. So always nice to have access to the team for sure.
That's exactly right. And without further ado, let's get right into the show here today. Format of the show is really, really simple. There's 3 rounds. There's 2 coaches. We each bring 1 pick for each round. There's a delta round where the trade has to be based on direction. Theta round where it's based on cash flow principles, some cash flow concept in the market. And then, Tyler, we could have fun with a wild card round where we could do whatever we want. You know, we can bring any type of strategy, any type of analysis. Yeah, that's why we call it the wild card round. You are officially the challenger here tonight, Tyler. So let's rock and roll. You're up first, man. Delta round first. What do you got?
All right. Yeah. Let me pop up the screen here. Delta round. I've got a stock from the hottest sector of the last, I don't know, couple of months. Crude oil has been on fire, and the energy sector has been hot, right? Here's XLE, the energy sector, just straight up really for the last month. So I was trying to find a low risk entry point because I feel like the move in the energy sector is maybe a bit extended, but it pauses for a day or two, goes up, pauses for a day or two, goes up. So who knows when this is going to end, but it's got the momentum right now. Crude oil, just very, very strong uptrend here, and came across a nice little breakout setup in EOG Resources, ticker EOG. I like the little digestion here. If I were to rewind and go back, a week and a half ago, I would have said, EOG, you're just a delight. You're so strong. Love the chart. But what am I going to do here? I can't chase. I need you to pause. I need you to pull back. I need you to give me a better entry. Take a breather. Let some selling come in. Let these moving averages catch up. Then I'll jump in. Then I'll have a better risk reward. And sure enough, it responded. It paused for a good 6 trading sessions. And then today printed this nice little bullish hammer. Sorry, not hammer, but bullish, almost engulfing. But I believe they call that a Maru Bozu candle. Kind of opened at the low, closed at the high. Hopefully I was close on the pronunciation there. But I like how it took out the highs of the last 6 or 7 bars here. And I think this thing has legs. I also like the proximity to $100. Often these round numbers act as magnets. You break 90, you're probably going to 100. This also has an earnings announcement coming up in about 15, 16, 17 days. think maybe you get a little bit of a boost into that. I'm hoping. So looking for a short-term bullish play here. I'd rather not hold through earnings. I don't think it's that risky with this type of stock. Earnings really haven't hurt this too much in the past, but I'd like to be out ahead of time if I can make my money quickly. Delta or directional trades lend themselves very well to short-term plays, much more than a theta play. So I like the pattern and the time frame more for a directional trade. The only question is, which one do you want to take? Now, I don't mind buying calls if the vol is low, and it is. The IV rank is low. But the issue here is it's a $93 stock. So long calls might be a titch high in cost in light of the more expensive share price. So I'm going to offset the cost of buying a call option by selling one against it. No need to diagonalize or calendarize when you're talking about a week or two time frame. Just going to make it a vertical spread. I'm going to buy a slightly out of the money call, 95 strike. I'm going to use the November expiration, expires in 30 days. I'm going to sell the 100 strike against it, essentially putting 100 as my target. Now, you don't have to hold all the way to 100, but that's kind of where I'd like it to go. Normally, I don't buy 1 month options. I'm making an exception for 2 reasons. Number one, there's an earnings announcement coming up in the next 15, 16 days that the anticipation of that earnings, I think, will keep the call premiums juiced up a little bit. I don't think the decay we're going to experience in the next 2 weeks is going to be that big of a deal. Secondly, I'm offsetting my theta exposure with that short 100 call. So long 95, short 100 in November. Here's the trade structure. I've already built it. It's only $1.57. So cost is low, in part because it's a November option, in part because it's slightly out of the money. I'm essentially risking 150, and to make the math easy, I'm going to round it to 160. Risking 160 to make $3.40, with potential 200% return. So this has the juice, this has the oomph of the usual directional trade, which I like. So there you go. November 95 100 bull call, $1.60 or so on EOG.
All right. So Tyler's first pick, the Delta pick, is EOG, energy sector, long bull call spread in November. And Tyler, from what I understand, I can also give a little feedback on this one right now. It's a beautiful momentum trade.
Indeed,
Beautiful momentum setup. There's no question about it. The energy sector is very, very hot. The only thing that you could throw a little bit of a wrench in there is that earnings is in front of you, and that it can lead to a little bit of complexity in management. But everybody loves energy right now. The high base is in play. There's no question about it. Bull call spread short term. Why the November, not a little bit further out in time traditionally? I think I know your answer, but I just want to throw that to you.
Sure. Because if I'm going to get out in the next 2 weeks anyways, why am I buying 2 to 3 months and making the trade move slower when I'm looking at a smaller time? So I just don't think I need to buy the time that I don't need the time. I'm going to be out by then. So.
Gotcha. All right. You done?
I'm done. Are you done?
My turn. Let me bring my screen up. And actually, we have a very similar bit of analysis in some regards. My Delta pick here, Team Tackle, is going to be FITB. And if somebody in the chat can type that in for me, Tim's Delta pick, FITB, out of the financial sector. A couple things I want to highlight here as I talk about FitB. Similar pattern in some regards. You know, we just looked at the energy stocks, energy also in a high base, breaking out crude oil strength. You know what other sector is our top rated sector at Tackle Trading right with energy? It's XLF, financials. Now, there's a little bit of a difference here, which is why I went with financials for my Delta pick here tonight. I had a feeling Tyler would be, pulled into the energy sector at some point. Didn't know it was going to be a Delta round pick. Don't have a lot of criticism about your pick, Tyler. It's a good one. But I like financials for one specific reason on Delta with momentum right now over energy, and that is earnings season. Okay. Every day on the halftime reports, we go through earnings roundup. Coach Matt gets all the raw numbers, gets the analysis. We break down the chart responses. We did it today. Over the last week and a half, we've been breaking down a lot of financial companies like Goldman Sachs, companies like JP Morgan, the biggest ones in the space, companies like BlackRock Financial, and FITB fits right into that. Earnings just happened. Okay. So earnings are behind us for the company, And also they're behind us for the bulk of the important stocks in the sector. Not all stocks in the sector. There's still some that are going to be trickling in. Theme around financials, I love FITB for a couple of reasons as well. We've got a very clear high base breakout that triggered today. Now, I would have loved to have, this conversation yesterday as well about the potential setup, but I don't think that necessarily means that we've missed the trade, and there's a learning opportunity there. When you catch a breakout off of a short-term daily chart, like on FITB, with momentum, in the financial sector, momentum of the sector behind it, stock trigger behind it, all that kind of stuff, you can still map a trade out if you can make the reward to risk work. Now, for me, I like equity here. I actually like keeping it very simple. It's only a $45 stock. You could go into the options market. The implied volatility is reasonable on this one. You can map out some kind of creative trade in those as well. But let's make this one a real simple thing. We're going to play bar by bar momentum on that swing trade breakout on the top side. Beautiful high base. As I come down in here into the intraday chart, there's a couple locations I can map out for me. Just below the intraday low is where I'm going to put my stop loss. Okay. Playing it bar by bar on the momentum. And in fact, on that hourly chart, trigger. You see the clarity of the resistance. We cleared out of all of that today. That's confirmation. That's price confirmation. Excuse me, I'm losing my voice just a little bit here, but that's price confirmation. I see that candle confirmation here in the context of a longer term uptrend, high base breakout, post earnings, favorable response to the report. So I don't have any of that mess to navigate against me in the past. Now, this is where I went back and I looked at other breakouts on FITB. Essentially, we can catch $4 to $5 on these breakouts, $4 to $5 on these breakouts, 40 to 44. Okay. From here, we broke out from 39, went all the way up to about 43. Other breakouts might catch a longer run. I do see history with the stock as well, where the breakout was a fantastic way to trade it. So pattern confirmation is in the probability in the way that I'm analyzing this chart as well. I then build a trade. I got $50 as my first target, trigger above the candle high, stop loss below the candle low. That maps out reward to risk. And I wrote the numbers down here about, let's see here. On FITB, I have reward potential about $4.30 from my trigger to my target. Okay. So trigger above the high, target at 50. Stop loss below the candle low, it gives me 2.1 reward to risk to that target. That fits my definition of good enough. That's a step system rule. It's the way that I approach directional swing trades here. FITB, swing trade momentum off the high base breakout in financials is my Delta pick, Tyler. There you go.
Yeah, great, Tim. One quick request. It's throwing our cams in the top right. So it's covering the right side of your chart.
I see
where the breakout is. So maybe put it in the center and they'll better.
That is so kind of you, Tyler. You could have let that become a detriment to the way I was presenting, let it get in the way and you would have swept up, but no, you're not going to do that. Let me do 45 days to the right. Let me know if you can see that right there with the cam.
Yeah. Let me see on the delay here. The delay will take a second, but I'll let you know in a minute.
Here's the trick. Now, let me review that real quick, kind of give people a chance to understand it, then if it was in the way. And I appreciate you bringing that up.
Yeah.
Breakout here off the high base, trigger above the daily high, momentum trade at bar by bar, T150 based on previous target zones, stop loss below the daily low, also below the breakout channel. Reward to risk maps out favorably 2-to-1 in my favor in that regard. It's a momentum trade on a high base breakout.
Perfect. They can see it now. It did move it over enough.
All right, very good. So let's bring.
I don't have anything negative to say on that, actually. In fact, I like the financial sector so well. I'm going to piggyback off your analysis, and when we kick off the theta round, I'm going to pick a financial stock.
There you go. We got votes coming in here, Tyler. Now, during these little moments, we got a little lag on YouTube, so we got to have a little bit of delay. While we're waiting for people to vote, give everybody a chance to vote who is watching live. We'll watch those things coming in, then we'll call it here officially in just a minute. Tyler, there's a couple things we were talking about today, just casually, I thought was interesting with you and your life. Number one, welcome back from vacation again. First of all, hope you enjoyed it. But you told me, me and Matt earlier today, you went and saw the Bond movie over the weekend. The most recent Daniel Craig movie. Is that right?
Yeah, No Time to Die. I did. And I rather enjoyed that flick. So I'm looking forward to your softball question because, I loved it.
Well, first of all, was it good? You did enjoy it, would recommend it. People should go see it, that kind of thing.
It was good. And couple of tips. Number one, some Bond movies are really hard to follow. I think sometimes it's cryptic, the storyline. This will be better if you watch his previous couple of films to get his backstory, particularly Spectre. Otherwise, you won't really understand some of the interplay between him and the villains.
I see. Interesting.
So, because it's almost like it's his final movie, right? So it's kind of the culmination of his story, and so it references some of the previous stuff.
Well, these kind of things always bring up the obvious conversation, especially around franchises like Bond, and who's the best Bond of all time? Daniel Craig is a great one. I know you like the movies. They're current. They're really modern made, but you've got some big ones out there. I'll tell you, Sean Connery, Pierce Brosnan, Timothy Dalton, one of the originals, right? Daniel Craig's obviously a great one. Roger Moore. Which do you like the new versions of Bond better than any of the historical ones?
Look, I mean, I'm the only two really that would be in play for me are the ones that I've seen because I'm younger. So it'd be Pierce Brosnan or Daniel Craig, right? Because the previous ones just weren't my generation. I will tell you that I had a Nintendo 64 and I had the 007 game on there that had Odd Job, the little dude, and that had the cool watch, and it was Pierce Brosnan that was he was Bond in that particular version. So from my youth, that was a particularly formative actor, Pierce Brosnan, simply because of the video game, actually.
I know, I was telling Matt that as well. I loved that Bond 007 video game from Nintendo back in the 90s.
Yep.
That's kind of where I lean as well, but that's not really the question about the movies, right? If it was just based on that and you put the game in there, I'm going Pierce Brosnan. I like the new version. I like what Daniel Craig's doing. I'm looking forward to seeing the movie. Yeah. All right. Listen, we've had enough time, given him enough chance. It's a close vote, but Tyler takes the Delta round 54% to 46%. Really close there, Tyler.
Can I say one more thing on Daniel Craig? The scene in the movie where I kind of knew, okay, writing's on the wall, he's on his way out, is when he's standing beside his female counterpart, and she looks like his daughter because he's getting so old. It's like, at a certain point, these young female actors that are the main gal, it starts to not work when he starts to look like their grandpa. You know what I mean?
Yeah, I do know exactly what you mean. So that's funny. That's always been a Bond staple, right? Yeah, but it is what it is. All right, let's go to Theta round. Let's go and move on into that one. Tyler, you're back up. What you got for Theta? You were hinting at a financial stock, I guess.
I was hinting at a financial stock, and I'm actually calling it audible because I was going to make this my wild card. But I think it works well with your analysis. And also talked about financials in halftime report today as part of the Jedi options. But when you look at XLF, which to Tim's point has been, second really good performing sector aside from energy, the top holding in XLF is Berkshire Hathaway. And so I think it's appropriate that if you're fishing in the pond of financials, the biggest fish in there is Berkshire Hathaway. Part of the reason why XLF has done so well is because of Berkshire. And if you think XLF will continue to do well, stands to reason that the largest holding will do well. What I like about Berkshire Hathaway is that it gives you a different price range to play in. XLF is a $40 stock. FitB was a $40 stock. Berkshire Hathaway is a little more pricey, almost $300, which makes it more interesting for an option spread trade. It's easier to build spreads with more expensive stocks, which is this. So you have a $287 stock here, and it's it's interesting because the intermediate term, the 50-day moving average is flat, which is not really bullish. It's not bearish either, but it's flat, it's neutral, it's sideways, which doesn't really lend itself well to a delta trade, right? It's kind of the opposite argument of what was going on in EOG. So I thought this was a better fit for theta or time decay. I want to build a trade where if this short-term bullishness doesn't play out as I would like, and it just goes sideways, I'm still able to depart with a gain, right? So I'm going to set up a trade with a profit structure that is less directional and will still give me a good profit if it goes sideways. But if today's rally is telling, and I think it could be, that is a breakout for Berkshire Hathaway. It is taking out a pivot here. And I think it could run up towards the next resistance, which is 290, 292 or so. I want to have a little more juice in the trade, meaning, profit if it goes sideways, but even more profit if it does start to get more directional. But quite frankly, having a target of 292, 293 on a $287 stock is not exactly like aggressively bullish, right? So higher probability cash flow play, I think, matches my slightly less directional type of opinion on this stock. Now, it has really cheap options. The IV rank is dead at 1.56%. Furthermore, I don't really know when the next earnings announcement is, and I don't really care because this stock barely moves on earnings. I don't even mind holding this trade into earnings if we needed to. I like this for a poor boys covered call. So what we're going to do here, and I'm going to amp up the leverage for those of you that watch the halftime report. I'm going to do something similar to what I did in Goldman Sachs. I don't really want to go out 3 months, 4 months. I just want to go out maybe 2 months. Buy a 2-month in the money call, sell a 1 month out of the money call. I think I can have a pretty good trade structure. Looking at November options, Berkshire Hathaway options aren't like super actively traded. So I want to stick with the strikes that have decent open interest and volume. And my eyes kind of gravitate towards this 290 strike for November. It's about a 42 delta, which kind of matches our 40 delta that we usually default to for selling a covered call. So I like the 290 strike. And that's a lot of premium, $325, a lot of premium. So I'm going to sell that. And then instead of buying the stock, which is really expensive, I'm going to do the poor boy and buy an in the money covered call. I'm going to buy a 66 delta in the money call, pay about $12. So think about it. I'm paying 12, but I'm receiving 3.5. So I'm cutting the cost considerably with the short leg versus the long. $8.5 trade here. And I thought I already had it. I don't. So let's think about the numbers. So $8.5 is what I'm paying. I want a decent reward if the stock doesn't move. And I want an even better reward if the stock does go a little more bullish here. If the stock doesn't move, I'm looking at about $130 gain, which is, can't do that in my head, 130 on 858. About 15% if the stock doesn't move, which is par for the course. It hasn't really been moving the last couple of months. But if today's little breakout is a sign of things to come and it rips, I've got upwards of maybe $300 if I'm lucky, more likely probably 250 to 300, which I think is certainly attractive. At 250, you're 30%. Call it 15 to 30% return, which I think is a respectable ROI for this type of trade. And I just think it's a smart way of playing Berkshire Hathaway if you really want to play in the financial space and not play XLF, but play a bigger, higher price stock.
All right. Now, poor boy cover call has been one you've highlighted a couple of times here today. And on the price of that stock, it makes a lot of sense. Berk B, for a poor boys, I get it, especially where you've identified that a little bit more of a neutral thing. The only question I would have, Ty, is why the December not a little bit further out so that you can capture a little bit more theta in this trade instead of making it, as much of a Vega sensitive trade as theta. By the way, Vega will benefit this when the vol goes up. But why the December-November combo?
I think it's a cost. And whether or not I want more theta, remember, theta reveals itself in the potential profit, right? And so in a roundabout way, Tim, if I'm saying $130 or a 15% return, if this goes sideways is sufficient, I'm simultaneously saying the theta is good enough. Whatever the net theta is that gets me to that 15% return, I'm satisfied. If I were dissatisfied, I would have, the number just wouldn't have been as good here. It would have forced me to go further out to get a higher theta. Mm-hmm. And I suspect that going out to January is going to add enough cost to where I wouldn't have wanted to have paid it. Now, $14 would have added $200 of cost. That tips me over, $10.50. So I don't know. I don't like spreads where I got to pay more than $1,000. I just like being more triple digits instead of 4. So a combination of those two, I guess. The price plus I think the theta was good enough as is.
Very good. Okay. All right. Gotcha. Berkshire Hathaway is Tyler's theta pick. And so now I guess it is my turn.
Oh, by the way, somebody put in the comments section, Tyler's theta pick. Berkshire Hathaway forward cover call for me.
I could do that for you, Ty. I can request those things as well, but you can also do it as well. All right, let's go with mine. Let's take a peek at where we're at. So Berkshire Financials, you bet. I understand where you're going with that. Sticking with what works, sticking with that conservative approach to a theta pick. I understand that as well. I have a little different analysis for my theta pick here today, and I'm going to tell you. I'm going to give you the conclusion first, and then I'm going to give you some of the lines of thinking that got me to that conclusion. Okay. I'm going to do a covered call on Csiq. Now, if you look at Csiq, if you're a Team Tackle member and you know the company, you know that Csiq is on our dirty, sexy money list. It is optimized for covered calls. It is what we do at Tackle Trading in terms of 10 stocks every year that we think are wonderful companies that have great growth potential and also good fundamentals that give good covered call returns. Solar has had an interesting stretch here in the marketplace. And one of the things I do every day, Tyler, is I look at the top gainers and losers by market cap, top 10 every day. I write them down in my daily routine, which companies are moving. And I'm going to tell you right now, over the last 3 weeks, we've seen a lot of solar stocks on that list, on the top gainers. Solar is getting some juice here after being out of favor for a very long time. If you look through the solar industry, you'll notice company, Enphase, last month, picking up off the lows from 140 to 180. Could you be interested there? Sure. Solar Edge, picking up off the lows from, 260 to 180. All of these charts have been rising in solar recently. Sun Power, Sunrun, Nova, JK Solar, even my favorite Csiq coming up off the lows. As I looked through all the charts today, I was interested in many of them. In fact, I'll even give you an idea. The solar ETF, TAN, shows you some of the strength in solar and the potential in the sector moving forward. Okay. Got clear resistance. We got barrier to change. It's popping up above the 200, coming off of some support points. The entire sector is on the move to the upside. I considered little trade on run, a little breakout above the 200. I considered Sun Power. I went through and looked at the numbers, a little breakout above 30. There's merit behind some of these trades as well. Maxit. If I was doing direction, I might have picked some of these other areas, but I decided to go with Csiq. I wanted to highlight the move in solar recently. I've seen bottoming patterns, bottoming action. I've seen favorable sentiment, and I've seen charts improve. And I decided to stick with a company that I trade a lot, and that is this Csiq because it's on my watch list. I have the most confidence as a trader going back to the well of companies that I've traded over and over and over and over again. Csiq for me is a wonderful covered call stock. In fact, I even ran some numbers using the Tackle Theta research spreadsheet here today for Csiq. I looked at the November options using a 23 delta, which is the one I actually would prefer. And I'll show you the risk graph here in a minute. I ran them against a 34 delta, which is more picking up a little bit higher cash flow. Even a very low delta, 1.8% credit ROI. ROID standardized 8%, well within our what we're looking for, and that's on a 23 delta. On the higher delta 34, closer to the rule of 40, you can pick up 3.5%, depending on the month that you're looking at. Csiq is a wonderful covered call stock, and I really like what's happening in the solar industry right now, picking itself up. Strong fundamentals, technical analysis. We got a double bottom. Okay. We got a potential for a breakout here where I think the best place to write the cover call is going to be right here at $42. You could even go a little higher out of the money if you wanted to. You could even capture a little bit higher delta. I'll show you what I'm looking for on the risk graph. Cover call is a neutral to slightly bullish condition. If this thing does break back above, and by the way, bottoming characteristics in the market have been very important to identify early. As we get back above moving averages, as those MAs turn over, as we're looking for a potential breakout, I see CSIQ maybe testing the highs over the next month, testing a cover call location around $42, going into the risk graph itself. Couple things. Number one, there is an earnings report. Okay. It's not on that sheet, but I looked it up several places. We do have earnings coming up. They're going to be reporting about November 12th. So you got 3 weeks till earnings. Until then, you can navigate this a couple of ways. You buy long stock at $37. In an IRA, you're looking at $3,700. In a margin account, half of that, traditional margin, you're $1,900. Affordable for cover calls. We're not talking about $400, $500, $600 stocks. Affordable for cover calls. We sell the 42 strike price, pick up 70 cents. Now, when you're building cover calls out there, you veterans know this, 30 days out, optimize for time. Okay. We know that that's where time decay curve comes in and benefits the most. 40 delta, I used a combination of the technical analysis that I believe is going to happen, as well as a delta rule. And my rule is lower than 40 delta on a traditional setup. Went all the way down to 23 delta so that I could catch some of this upside if it does materialize. Cover call on that regard, I'm still picking up a very nice percentage. My maximum ROI, if it goes up and they call me out, Tyler, I pick up 12.8% return. I like the setup. I like CSIQ. Even when I get to the earnings report, if I do want to hedge it, the put options are relatively inexpensive against the call options. I can pick up my put option if I ever want to buy a hedge, which you consider to do when you get to earnings reports. You wouldn't have to make that decision until you about a day or two before. But as I want to buy a put option, I could easily add that, hedge off the trade as needed. And if the trade is working, I can then roll calls. I can continue to maintain it. And I actually like CSIQ long-term fundamentally in the sector as it is improving. Covered call on CSIQ, solar stock out of Canada, is my theta pick. Tyler?
Look, I dig it, bro. That was a good pick. I like solar.
Yeah.
I like offsetting the risk with short calls. That I think is what does it for me. When I find something, because CSIQ can be pretty volatile. When it works great. When it doesn't, it's tough. But I love a product like that has juicy premiums where you can be strategic by selling puts and calls against it. Yeah, I dig it. I dig it, bro.
All right. Well, so we got two up here. We got Tyler's Berk B pick, which was in the financial sector using a diagonalized spread called a poor boy's covered call. And then we have CSIQ covered call analysis from Coach Tim. Votes are up. We'll give it just a minute. Tyler, we're talking movies, my friend. I understand you're also going to go out to Dune here in short order. When does that thing come out, by the way?
What are they usually come out Thursday night, right? The week
is
they
it this
come out,
weekend?
It's usually Thursday night. So I think it's what's today? Wednesday? Probably tomorrow night.
Yeah. We were talking with Coach Matt earlier today, and Dune, I remember watching it as a kid. I really don't remember the film that much. Matt was saying, hey, do you like the movie? And I was thinking back. I remember seeing it from the 80s, that classic 80s sci-fi iconic film, but I don't really know the premise. I know that you've read the book or the whole thing. What are we looking at with Dune? Post-apocalyptic, the world is going to end. There is no water type of scenario. What is the basic plot line in there?
Look, it's been a long time since I read Dune. So this question will be easier if you ask me about Star Wars or Lord of the Rings, but I believe it's a different planet. I don't think it's Earth. I believe it's a different planet. And there's a water element. It's like a big dude. Look, I'm an idiot. I don't know. I don't know what this story's about. I can't remember. Okay.
By the way, the reason I set it up that way is because I looked up a blog on Rotten Tomatoes, as I always do this kind of stuff. You guys know me well enough in advance. And these are the top movies you can watch if you can't make it to Dune this weekend. You tell me if you think any of these are kind of in the same line that you enjoy. Just give me a yes or a no. Blade Runner 2049.
Wait, what's the question?
You like these movies? Do you think these are good as well? Post-apocalyptic
Oh,
sci-fi
never saw it.
movies.
Never saw it.
You've never seen Blade Runner? Oh my goodness. Star Wars. Let's go back and start watching the original Star Wars.
Listen, I hate Star Wars. What are you talking about?
Mad Max. You see the most recent Mad Max?
No.
This is not even your genre, young man. I don't think so. Fifth
Dude.
Element was on the list, which I love.
I did like Fifth Element a lot. Yes.
Starship Troopers. It's a bug planet. You don't even know these movies. We'll see what you have to say about Dune. That's okay. That's the fun thing about film, by the way. I got no problem with it. I didn't know it either. I know you're going to go see it. You must be in a movie kick here lately. Is that right, Ty?
Well, hey, we haven't had good movies come out forever, and then you get Bond and an epic movie like Dune back to back. Yeah, I think you got to.
All right. By the way, you talking about Dune was probably as bad as your Burke B pick, it looks like, based on the voting. 71%, 29%. I'm just joking, Tyler. I actually think it's still a good pick. Tim wins the theta round. We're even, my friend. A little healthy competition come. Yeah, a little healthy competition. All right, wild card round, Ty, you're up.
All right, you degenerates. You don't like the Burke B. I get it. It's boring. I tried to juice it up for you, though. But come on, if you were going to play Burke B, you could do worse than that poor boy covered call. Am I right? Am I right? Okay, here's the deal. We're wild card round now. This is my last pick. I tried to find. So here's how I prepare for this. I went through my entire watch list. I identified the patterns that I thought were interesting, and I didn't want to be all in the same sector. No, I'm not going to say that. This one is one of the best setups in the market right now, bar none. Earnings announcement is out of the way. I think you're crazy if you don't like this stock. Okay, you're crazy if you don't like this stock. Alcoa. Let's talk about metal and mining for a second. So Alcoa comes out. This is in the metal and mining space. And remember, we're in an inflationary environment. Commodity prices have gone bananas. Alcoa is positively correlated to that whole space. Look at the EPS here: 26 cents, 79 cents, $1.49, $2.05. Hey, maybe there's a reason this stock has almost gone up 300%. And they're so impressed by the earnings, even though it's gone up a bunch this year, it just goes bananas. I wasn't here for this. I didn't applaud for Alcoa because I was on the beach. I'm back. I'm applauding. Well done, Alcoa. Love the breakout. Love the breakout. Love the volume confirmation. The question you have to ask yourself is this: if they loved it so much on the news, if they loved it so much on the number, do you think they would immediately abandon the stock? Do you think this breakout's legit, or do you think it's a ruse? Do you think they're going to hate it the next week to the degree that they loved it the prior week? I doubt it. I highly doubt they like this company. They like the fundamentals. They like the technicals as much as they just did, and they're going to completely abandon it, which is a long way of saying this dip is a buy. This is the first low-risk opportunity you've had to deploy something in Alcoa. I don't know if it pulls back a little further. It certainly could. It is sitting at the old resistance level, which the old principle of polarity tells us that old resistance often becomes new support. But even if it doesn't, even if it pulls back to the 20 MA, I like the dip. The only reason I wouldn't like this dip is if it breaks the 50 MA. I would be very surprised if that happens. This is not just an Alcoa story. The entire space has been hot. I really like copper and FCX as a tell, as a canary in the coal mine, so to speak. You know, the awakening here recently, the break back above the 50. So I think this is an industry-wide story as much as it is an Alcoa story. So there's kind of your backdrop, right? There's your bullish argument. If you want to wait for a trigger like breaking a prior bar's high, feel free. It's just a matter for me of how do you want to play this? What strategy do you want to use on Alcoa? And I honestly don't think you can go wrong. I think you can probably throw just about anything bullish leaning at this and you'd be fine. Now, to be honest, when I first built this was going to be my theta pick, right? I was going to build a diagonal spread on this. But since you loathe my diagonal and round two, I'm going to pivot and I'm going to give you something a little more spicy. Look, I think this thing can get back up to its highs. I think it can get back up to 60. Okay, so let's jazz it up a little bit with something more directional. Options are dirt cheap because earnings is in the rear view mirror, and you can see the vol crush that accompanied that. So we could buy up some cheaper call options here and supplement that with a short call. So I'm going to build a bull call spread here, bull call vertical. I'm going to go out to December to give it a little bit of time. And, I could also mention seasonally, we're at a good time into November, December. I think that gives a tailwind to stocks here. But at any rate, December, 58 days out, you got a 50 strike, you got a 55, you got a 60. I'm feeling froggy here. I'm going to go 55, 60. I'm going to buy basically a slightly out of the money call, sell a further out of the money call. I love the low risk here, $1.43. You can just settle in. You don't need a stop loss. Give this thing to 2 months. Come back when it's at 57.50 or $60. You got a lot of upside here. Risking $1.40 to make about 360. I dig the risk reward. I dig the stock. I dig the sector. I hope you dig the pick and you give me the win.
Oh, Tyler, I like the analysis. Definitely an interesting pick. Alcoa post-earnings response. One of the reasons we cover earnings so much, quite frankly, is because it's that next setup you're kind of interested in. It's not always the first day of the setup. It's the analysis that comes as you move down the line. A little bit of a Cody special there as we've come back pretty quickly into the old resistant zone. Alcoa has history. Matt and I were joking about this this week. We're old enough. We've been around the markets enough to remember earnings season starts with Alcoa back when we started trading, right? It was always the one company that you always remembered, okay, earnings starting because Alcoa just did report. Interesting setup, wild card round, makes a lot of sense. All right, we're going to get into mine next here, and we will see if I can win this thing and bring it home. Okay, I thought about this long and hard today in terms of how I wanted to approach the wild card round specifically. And for me, there's a lot going on in the markets right now, but earnings is the story. And there's a couple earnings strategies I actually really do like heading into earnings events. Now, most of the time we got to avoid earnings. That can be frustrating. Coach Frank talks about it quite often that, well, if earnings are in front of us, I can't always map out a trade until they get behind us. The season makes it hard to find analysis, all that kind of stuff. We all complain about earnings. Whenever there's a little red telephone, few days out, it's like, okay, well, I can't take that trade because we're only 2 days until they report their earnings, right? Well, there's ways to trade the earnings as well. Here's Snap. Snap reports earnings tomorrow after the bell. Not before the bell, not on Friday. Okay. They report tomorrow after the bell, which means we can map a trade out, we can execute a trade, and then have the earnings gap be a part of it tomorrow night. What I'm going to highlight here with Snap is what we call an inverted butterfly trade. And I'm going to show you a couple of different things about it that I like. Number one, inverted butterflies are what we call bidirectional trades. Simple analysis. If it goes down far enough, we have a profit window. Okay. Profit area here. If it goes up far enough, we have a profit window. The analysis comes in the probability of it exceeding those break-even points between the day you enter and the time of exit based on your trading plan. On earnings, we have specific catalysts, which are called gaps, that can impact a trade's profit windows on their price chart. Here comes the Snap analysis. In the tackle trading playbook, if you want to learn about inverted flies, just head over to the pro section where it says tackle trading playbook, go down to the Vegas section, inverted butterflies will be there. Okay, there's rules around them, delta rules, theta rules. We like to go no more than about 8 weeks out. We want to have delta in the 50 delta ballpark in the middle, but I'm just going to show you how I built this. 50 to 25 and 75 delta is the wings, but this is a risk graph trade. Let's call it like it is. You need to be able to go into the risk graph, map out a trade, have it make sense to you based on probability analysis, gap analysis, previous gap analysis to make it make sense. Here's the way I built Snap. 72, 75.5, and 79. You'll notice the window between wings and body, because in an inverted fly, the middle is where the body of the fly is. That's where this low point here is on the risk profile. The wings, as you look at it, okay, if you really just look at the picture here, you got wings over here, a wing over here, and the middle is the butterfly. The wings are at 72 and 79. The reason I have done that is that the market maker expectation for tomorrow, and this is an important part of the analysis, the gap projection is $6.8. I like to, when I'm doing a conservative inverted fly, I take half of the market maker move and build the wings based on that premise, okay? Because if the average gap or the expected gap or the projected gap is $6.8 based on market maker move, I feel fairly confident I can get a $3.50 gap. Current price on Snap is $75.65. I built the center of this inverted fly at $75.5. Come to the risk graph. Now, this is the one at expiration risk graph. It's a little bit scary, isn't it? If you stay right in the middle, you lose all this money, but you can only make this little bit of money. That's not the way it executes in reality, though, okay? A couple things to remember. I may get out of this trade on Friday. I might hold it till next week, but I am definitely not holding it till the 19th of November. This is not a 30-day trade. I'm only buying 30 days so that if I can get out within 1, 2, 5, 6 days of time, I can absolutely do that. The break-even points here, and set my slices here, to the break-even on the 20th, we're looking at somewhere in, actually, I'll just set them to the actual break-even there, not on the 20th. But up here, not 11:20. Where is my date on this one? I believe that is just the addict or this week risk graph on the single. I'm going to change the line to single. I'm going to show you what the trade will actually perform as day by day as we move this thing forward. Now, opening up this tool, I can project volatility analysis and all that kind of stuff. But I like a really simple tool to help me understand this. I'm going to add 4 day steps. Okay. Now, each one of these steps are just one simple day apart. So as we move forward in time, what has to happen? And what you kind of notice here is just a big old smile that should make everybody really, really happy. Every day I hold it, I do lose from time decay. But really the essence of the trade, Tyler, even if I hold it 4 or 5 days, I got to catch a move that's going to get me outside of a small window on the chart. Now, if you go back to Snap, you're going to notice a couple things. Historical gaps. A $6.50 gap projection. I actually have built the 72, so I need it to move beyond that location and the 79. So I essentially, all I really need, Ty, is for it to break the current range that it's in. The way that companies like Snap respond to earnings right now, I don't expect it to stay in the middle of the range bound. If it does, I've mapped out the risk in the trade to where I'm comfortable risking the amount of money that I am, even with a vol crush, which we're going to get. Let's say we even get like a 5% vol crush to understand my risk, essentially. I might lose 5, 10, 15, 20 bucks, something like that. It's a cheap trade. It's only going to cost me to build it this way, Tyler. I'll take a look at it for one contract, $313 in buying power, about 300 bucks. For a potential total credit of $37. Now, the ROI on that could max out at 12%, but I'm not trying to pick that up, Ty. I'm trying to pick up like $15 or $20 per contract, maybe half of the potential credit if I can catch a big gap out one way or the other. I think Snap has that in it, and I'll show you why. $6.50 market maker projection is only 8%. Snap, in fact, I'll give you the percentages I saw in the last 4 gaps, and we can look at this historically. I wrote some of these down. Snap gapped on 7/23, 16 bucks. We only need a $6 gap right now. That $16 gap would have easily put us into profitability the first day after earnings. Back in April, it doesn't look like a big gap. Even this one from close to close was $5 in this range. This is a volatile company, okay? Even this one here doesn't look like much. This one actually, even in January, moved $5 itself, which would be outside of my break even. If I get a small expected move, because I've built this so conservatively, I can catch a profit even outside my break even. And as I go back even a little bit more here, Ty, 2 years, I'll show you the gap from last October. Snap can run. If it does have a huge move, I can knock down a profit, very small profit, conservative profit target the day after earnings. If it doesn't capture a huge move, I've got enough time built in the butterfly. I can probably exit for a small loss. This is a way to play earnings. It's a bi-directional trade on Snap, inverted butterfly style, because I think this sucker is going to move and gap outside the range. Tyler, that is my wild card pick for Trade Masters here tonight.
Atta baby, you took the wild of the wild card to heart there, Timmy. I was a nice little advanced pick there. I love it.
Why not? Hey, wild card. I was going to go for something. Those are fun. That's what we call in, because I did a webinar for the coaching mastermind group a couple of weeks ago. We do our monthly mastermind group. And I reviewed the Start With Why video I did in the PowerPoint from a couple of years ago and talked to them about portfolio design. Those techniques I don't use very often, Ty. Very, very rarely, actually, when I'm in earnings season with small contracts, I'll play those. It's not the bulk of the way I'm approaching the markets, though. It's what I call a bag of tricks, or what one of your mentors called a non-core strategy, right? Non-core, specialty technique, all that kind of stuff. Votes are coming in for Tyler versus Tim on the wildcard round. This is the break-even round here, Tyler.
I'm sweating, Timmy. I'm sweating, man. I just don't know how it's going to go down.
It's early. We'll let him pick for a minute. I do understand you went on vacation here, Tyler, recently. And I'll tell you, I was thinking about that. I think it's important everybody takes some time away from the market. I was going to ask you something specific I planned, but the Dune conversation went so well, I'm just going to bypass that. How was your vacation, Tyler? Did you enjoy it? What'd you do? Get some beach time, all that kind of stuff?
Yeah, we flew into Cancun. So we were down in Mexico. I went to the beach at a place called Acamal. And we were right on the beach, dude. The weather was fantastic. They have turtles there. Acamal means turtle, actually, or Turtle Beach, something like that. So they have turtles that nest there, and we got to see them release like a bucket full of little baby turtles. The crazy thing is, those turtles, they release them away from the water. They get to the water. They don't weigh anything. They go into the water, and these waves just crash on them. It takes them like 5 attempts, and yet they keep trying. Getting knocked down once, and I'm like, screw it, I'm not going into the ocean. They just go right back in. It's kind of cool to see what is hardwired in the brain of an animal. I don't know. I mean, and turtles are cute. It was kind of a cool thing. I've never seen that before. So that might have been one of the highlights.
Yeah, when we were snorkeling in Hawaii a couple of years ago, we went to the Black Sand Beach on the Big Island in Kona, and there was these amazing tortoises right there. Even when we did some snorkeling in one of the bays there, I can't remember the name of it, but we got to see some good turtles, swim with them. My kids freaked out. They thought it was the coolest thing they'd ever seen. So that's really cool. I'll tell you, Tyler, congratulations, my friend. I think you win. Voting's been open a couple minutes. Everybody who wants to vote has had a chance. Tyler, 58%. Coach Tim, 52%. I got to tell you, I think the wild card, I could have went a different direction. It is what it is. Now I'm second guessing it, but it was a fun show. Tyler, congratulations on taking the title here at Trade Masters. You got it back, my friend. All right.
Listen, to everybody in the chat window, I love you so much. I'm so proud of you for making the right choice this week. And this just made my day. Very excited I was here. Tim, better luck next time, buddy.
I appreciate that, Tyler. We have a lot of fun here on this show. That's the idea behind the program. Let the coaches kind of give you guys some ideas around analysis and all that kind of stuff. But it's more about the thought process that goes into identifying trading candidates, reward, risk, probability, trading strategies, all those type of things. I can't wait to hear how the Discord channel went. First week we did it. New idea, something I'm very excited about. If you're a pro member at Tackle Trading, I believe Coach Matt's going to be there next week as well, having discussions while the show is going on, giving some of that instant feedback, talking with the pro members, those type of things. Come and join us in Discord and start the conversation. I think it's a really cool interface, platform, all that kind of stuff. But for tonight, Trade Masters, Tyler's the winner. Congratulations. He will be defending his title again next week against one of these coaches. Team Tackle, you are the best. As you're leaving the program here, or if you're watching it on replay, make sure you give that thumbs up, click subscribe, and click the bell. Until then, have a wonderful rest of your